the key message on Poplar is that it's a world-class ore body. It's more than 6 million ounces at 7 grams per ton. It's not very deep, and in the current gold price environment, it's entirely doable. So that's a big project. That's 100,000 ounces plus of annual production.
Hello, you're watching Proactive. I'm joined by Cobus Loots. He's the CEO of Pan-African Resources. Cobus, very good to speak with you. You've delivered a record first half profit of $147.8 million, 51% jump in gold output. What were the biggest drivers behind that performance?
Thanks, Stephen. Well, obviously, gold price helped quite a bit, but importantly, the gold price we received is still a lot lower than spot. So I think we received $3,800 versus current spot, which is obviously closer to 5,000. But then the fact that we were able to grow production by more than 50% is obviously has been a huge catalyst. And that production came principally from MTR, a full period of production from MTR, and then also from Tennant. And I think the exciting thing is that we expect production to actually increase further in H2. So guidance is 275,000 ounces to 292 for the full year, which implies about a 10% better production profile in H2.
You've reduced net debt by nearly 70% and you expect to be net cash by the end of February. How will that financial strength change your strategy?
Well, it's a great position for us to be in. We've managed to repay all of this debt despite obviously undertaking huge growth projects over the last 2 years. So that really is a massive positive. We've always, in our view, been great custodians of capital and allocators of capital. So the gold price, number one, and the fact that we now have net cash is not going to change our strategy of focusing on the right projects, focusing on cost control and generating excellent returns for our shareholders.
You've also declared an interim dividend, Cobus. How do you balance returning cash to investors with funding growth projects?
Well, it's exactly that. It's a balancing act, and I think we can do so, and we've demonstrated the ability to do so very successfully. We paid a record final dividend at the end of last year. The current gold price, shareholders can most definitely expect an increase in the final dividend also. And just despite the dividend payments, obviously we were able at a lower gold price to build and commission and now successfully operate all this growth. So it's always a balance, and I think we get that balance right mostly.
All-in sustaining costs were higher in the first half, but are expected to fall. What are the levers to drive down unit costs in the second half?
Well, the primary drivers for the overshoot on costs was the rand exchange rate, which we can't do much about. It was third-party material, increased royalties again because of the gold price, and increased employee expenses as a result of the really significant increase in the share price, which I don't think anybody can complain about. So all things being equal, producing more units in the second half should bring down those costs as we've guided. But I think on an absolute basis, Pan-African is very much focused on cost control. We're also implementing a number of initiatives such as renewable energy that we've spoken about, which is quite exciting, which over the medium longer term will most definitely also assist from a cost profile perspective.
You've got the Soweto Cluster DFS, Royal Sheba and Poplar studies underway. Which upcoming project has the biggest potential to accelerate production growth?
Well, look, Soweto, we will make a decision by June, I would think. Royal Sheba is a given. We're going to grow in production from Royal Sheba, but that's not a big capital ask. It's only about $11 million, and then it's self-funding. It'll take a couple of years to ramp up Royal Sheba. And then we're doing the studies on Poplar, and I think the key message on Poplar is that it's a world-class ore body. It's more than 6 million ounces at 7 grams per ton. It's not very deep, and in the current gold price environment, it's entirely doable. So that's a big project. That's 100,000 ounces plus of annual production. And then the market has asked for more clarity on Australia, and I think encouragingly, we've given a really attractive, what we think is very attractive guidance in terms of growth. We can grow from 50 to 100,000 ounces out of Australia in the next 3 years.
Second half milestones that investors should be looking out for, Cobus?
Well, obviously, as you've pointed out, there's some studies underway. The de-gearing is pretty much complete. We should be net cash. I think that'll be exciting come at the end of the year. And then just reporting back on progress in terms of meeting our guidance from a production perspective.
Well, Cobus, I hope you'll continue to keep us updated. Thank you very much for the time today.
Thank you for having me.
Cobus Loots, the CEO of Pan African Resources.